So, what we are going to be talking about is how to invest in the stock market for beginners. I've invested a lot of my money. In fact, I've invested most of my money in the stock market over the past 4 years because I am 22 and I am a pretty good investor. I've only lost on one deal, and I'll explain what that deal was and why I had to lose money on it. So yeah, we're going to talk about some basic principles that I wish I knew when I started out. And, well, I kind of did know, but like when I was starting to gather my research, I was researching when I was 16, and then I eventually was able to invest when I was 18. So I kind of knew what I was doing when I started, but anyway, some very, very basic principles. So I'd like to start out with a quote from Warren Buffett, and it's like paraphrasing, I'm paraphrasing, but he says something along the lines of, invest in the stock market as if it wouldn't reopen for 10 years. And so that's the perspective I take. Invest in companies that are going to be good in the long run, no matter what. A lot of people, actually, we're going to be getting to all this. So just invest in very good, safe companies, and you're going to be just fine. So, again, what I will say here is buy safe stocks. And what do I mean by safe? I'll explain. So buy safe stocks. Well, mostly safe. Buy safe stocks. And my recommendation that I tell all of my friends who I've helped start investing is at least 80% of your stock investment should be in some sort of safe stock that you know is not going to go to zero at any point in the next 10 years. And so what companies would that be? Well, like what stocks? Very first example is the greatest stock of maybe all time in my mind is Coca-Cola. Coca-Cola. Because they increase their dividend every single year, essentially, and the stock has always essentially gone up. It's go through cycles, but it's gone up over the past 100 years pretty steadily. So stocks like Coca-Cola, Canadian banks. I know in the USA banks aren't too safe, but certain banks are good. ETF funds, and so I'll explain what those are right now. Some ETFs. So what ETFs are is it's a collection of stocks, I should say. So let's just say you want to invest in, I don't know, in the real estate market through stocks, okay? And so instead of investing in one company, you can invest in an ETF, which stands for an exchange-traded fund. And essentially, you're betting that the real estate market will do well because the ETF is invested in all of the real estate market. And so that's pretty much what an ETF is. So if you're comfortable, like don't invest too much in the tech industry because that's very risky. But let's just say you want to invest in the banking and financial industry. Go and buy a financial ETF so that all of your eggs aren't in one stock, in one basket. And yeah, so those are just some examples. Buy safe stocks. Don't buy too many risky. Okay, we'll get to a lot of these. I have a lot of things I want to talk about. So, buy mostly safe stocks. Coca-Cola, stuff like that. Stay away from speculation. I guess I should write that. Stay away from speculation in the first place. I'll explain what that is. From what's called spec, tech, and we'll just say commodities, I guess. Com. Okay, that stands for commodities, the com. Okay, so stay away from those when you're starting out. Unless you're on Wall Street, just don't buy these for the most part. So a lot of people lose a lot of money betting on the tech industry, on a tech company. Speculation. So what speculation is you're essentially it's a stock without a dividend in the first place, and I guess I'll explain what a dividend is. But you're essentially putting all your eggs in one basket that the value of the stock will go up within a day or a week. And if you don't make money on that, you can lose a lot of money. A lot of people do. So don't do speculation. Always invest in the long term, or at least middle, like 2 to 5 years or 5+ years, or maybe even 6 months. Depends. But don't do speculation. So don't invest for the short term. Don't invest into a lot of tech companies unless they're Apple that pay a dividend. And don't go for too many commodities. Don't go for like gold all the time. Don't go for silver. Those are cyclical. Okay, those are pretty much speculation. Stay away from those unless you know what you're doing. But you're a beginner if you're watching this. Okay, so again, this is a dividend. So get dividends, and I'll add a second part here. And reinvest the dividends. Okay, so a dividend, what it is so a lot of companies if you invest in a stock, let's just say $100 in your stock. A lot of companies will pay you a certain percentage for investing in the company. So it's a way of driving the value of the stock up. It's very smart. So what let's just say, $100 stock, let's just say it's a bank, they pay back 4%, okay? So every year, for every stock of the $100 stock you own, you're going to be getting back $4, no matter what. So those stocks are usually very, very safe. Well, actually, high dividend stocks are actually not safe. Usually the middle range, like banks, that are pretty safe for the most part, in Canada at least. And so, now the greatest power in finance is compound interest. And what do I mean by that? So all the dividends you get, if you were to reinvest them into other dividend-paying stocks, it'll increase the overall value of your portfolio, and you'll be getting back more dividends every single time you reinvest. Meaning that, so I read a study actually, and people who invest in the stock market and reinvest their dividends, they can earn over $1 million more in their lifetime than the people who get their dividends and spend it on jewelry or something, on random stuff. So reinvest your dividends. In the long run, that's going to be the best thing you can do probably. And reinvest your capital gains as well. So if you sell a stock for more than you bought it for, reinvest that into another stock. That's how it should work. Don't take out all your money and buy a car, all right? It's dumb. That's what a lot of people do. Okay, so what's next on my list? I think that, so I said reinvest. So this is kind of a basic principle that people do not stick to. And for whatever reason, oh my God, this bothers me. So buy when everyone else is selling. So why? What do I mean by that? Buy when everyone else is selling. So usually when people are selling, the market is bad, or it's predicted to be bad very soon. And so usually when people are selling, that's when the stock will be at its lowest, okay? During a recession, when everyone's selling to get out, to make sure that they don't lose more money, what happens is you get people that become very rich during recessions because the stock can only go up from there. So here's another thing that I want to talk about. So also sell when everyone else is buying too. That's another, it's vice versa. But here's the thing. If the value of your stock goes down, within a week of buying it, or a month of buying it, or 6 months, don't sell it. Under 99.99% of circumstances, don't sell when the value of your stock goes down just because you get scared. That is the worst thing you can do. You're automatically losing money. Now, there are certain cases where you should do that, okay? There are very, very, and I'll explain one example that I went through where I had to do that and I had to lose money, which ended up working out very well for me. So I'm going to give you an example here, and it goes along with this next tip here. Pay attention to the news. Big one. It can save you a lot of money if you do this, okay? So I'll tell you my example first. Let's just see, this was 2013, 2014. My friend, I remember this, my friend in university came up to me and we were talking about some global crisis. It was, at the time, what was it? Something going on, I think it was Egypt actually. It was Egypt's revolution. It was around that time. And then for whatever reason, we got off topic and he brought up the word fracking. I never heard this word before, fracking. So I kept asking about it, and he said pretty much the U.S., what they want to do is they want to, get more oil by using all this complex system, and it's going to damage all the lands and stuff. But I thought of it too, that's going to be horrible. But I thought of it as, dear God, the U.S. is going to increase the supply of oil by a lot in a very short period of time. And so the value of oil is going to go down. The oil stocks are going to go down. I was invested in an oil company. At the time, it was Canadian. It was stationed out of Alberta. What was its name? Sorry, this was a couple years ago. Was it Kayara? No, it might have not been. It might have been Kayara Oil. I don't know. You can check that. It was one of those Alberta oil companies in Canada. And I remember, within 24 hours of my friend telling me about this oil fracking and me looking it up, I sold all of my Kayara, I think it was Kayara oil stocks. And all of my Canadian oil stocks were gone within 24 hours. And, I ended up losing, it was essentially zero. It was like $20 I was invested over $1,000 in that. Which again, for most people, for a lot of you, 30-year-olds watching this, that's not a lot of money. For a student, that's a decent amount. For $1,000, it wasn't my largest holding at all, but it was $1,000 in Kayara, and I sold all of it. I lost $20 or $50 or whatever the hell it was. And I remember checking that stock price 6 months later, and I saw this recession coming. Actually, I took a lot of my money out of my Canadian investments because I saw this kind of come in this Canadian recession. Because a lot of our economy is based off of oil, right? Especially in Alberta. And so I sold a lot of my Canadian stocks, and yeah, they ended up going. We got hit pretty hard by this. We're going through a recession right now, America, because of your fracking. So thanks. So I sold all of those, and it ended up plummeting. All those prices ended up plummeting, just because my friend told me about this word fracking, which I'd never heard before. Amazing, right? So just stay up for random stuff like that. Pay attention to. The other thing, too, is it's vice versa. I remember one day, it was the new iPhone came out. This was, last year? It was 2 years ago now. Wow, it was 2 years ago. And everyone was buying all my friends pretty much converted from Android or, whatever the freaking phone they had, Samsung, to iPhones. Like literally within a month, 4 of my friends bought the new iPhone. And this was in September. So I bought this stock because I was like, oh God, there's just from what I can see around me, their earnings are probably very, very high right now. And I remember 2 weeks after I bought that, they released their earnings report, and the stock increased by like $20 within weeks span. And I ended up buying it for like $85-ish. And I think it was 85. It might have been 80, something around there. And it sold it for $131 American. It was great. Each stock. I don't know. I probably bought $1,000 worth of them. No, it was about $1,000. So I ended up making like almost 40 or 50% on that investment. It was good. So pay attention to the news, everyone. Very, very important. Another thing, if you're just starting out, just keep in mind, don't invest less than $500 at a time. So don't invest less than $500 at a time. So this is just simple mathematics, actually. So the bank, or I'm guessing you're investing through your bank, right? They have fees. Every time you buy a stock, if the fee is usually $10 if you're buying domestically, and $50 or to $100 worldwide. And so let's just say you're investing in a domestic stock, and the fee is going to be $10. If you're investing $100, you're paying a $10 fee, you have to bet that the stock is going to pay you back 10% within a couple years, okay? To make it, that doesn't happen a lot, okay? And so I say invest $500 minimum in one stock at a time, because it'll limit the amount of, I'm trying to think of a better word, the amount of increase that the stock has to have to make it pay off for you. So if you invest $500 in a $50 stock and the fee is $10, if the stock goes up $1, then you've already made your money back. If it goes from $50 to $51, you've already paid the fee off that you had to pay the bank. So just something to keep in mind. And so, yeah, this is kind of all the basics that I wanted to go through. I guess a few more things I should say. Don't invest all of your money in one stock. Okay? So I just said $500 at a time. Don't invest everything in one stock. Try to do $500 here, $500 there, $500 there, $500 there. Don't put all of your eggs in one basket. That's again, dumb thing. Try and invest in as many dividend stocks, but yeah. And I think that these are just kind of the core things that I go through investing. Do your research too, but keep in mind a lot of research on the internet is BS. The only research I use, is literally graphs and earnings reports and, pretty much the statistics you can get from the stock itself. Not from the company, not from speculators, not from news agencies, but from the physical mathematical numbers that they have on the stock over time. So I look at all of the charts, and that's all you really need. I'm one of those rare investors. I've only had one loss, and I've had 3 big gains, one of which was in tech systems, one of which was in Apple, one of which was in Nike. And Nike had a lot of my holdings too. I'm glad I sold that because I made a lot of money on that one. So just keep in mind, and don't sell when everyone else is buying. Just do all of this, guys. Do all of this, and you're going to be fine. Live by all of those. Live by all of these tips here. So do you guys have any tips? Leave your tips in the comments. I kind of want to know what your tips are. These are just the ones that I've been able to build since I was 16, and they've really helped out a lot. So just leave a comment and let me know what you think. Subscribe. Heart me on Periscope, please. I'd like that. And I just want to thank you very much for watching. These are just my beginner tips. And you are all very beautiful people. And I will see you guys next time. See you guys tomorrow, YouTube. And I'll see you in about a week on Periscope. Thanks for watching, everyone.